Hey, how are we doing, guys? My name's Tanner. Welcome to Crypto Bible, and welcome to a new series I want to be doing for you guys regarding tools that you guys can use in regards to doing your own technical analysis and everything else. Now, there's a lot to cover, and in this video, I want to be covering how to actually use the Fibonacci retracement tool. I want to explain what it is. I want to show you how to use it, and I want to give you some examples of how to use it as well. Now, don't get me wrong, there's going to be a lot of people out there that already use this method that may use it in another way that I use it, that could probably explain it in a better way that I do as well. On this channel, I try to just keep everything as easy and as simple as possible. So that is basically what I want to be trying to do today. Hopefully, I'll be able to create a whole bunch of new videos for you guys on using other tools and indicators within the charts. For you guys to actually take away and use for yourself. One thing I could say is that the Fibonacci retracement tool for me is probably the most powerful tool when it does come to chart analysis. I learned that by watching someone on YouTube called the Blockchain Backer. I must admit he's helped me a lot throughout my journey. So a lot of what I have learned has come from him, and hopefully I'm able to kind of pass it on to you guys as well. So stick with me, and hopefully by the end of this video, you'll understand what a Fibonacci retracement is and how you can use it. So the rest of the video, guys, it will just be on the charts until right at the end. So let's get straight into it. First things first, guys, is for us to actually know what the Fibonacci retracement is and how to use it. It's good to kind of understand it. And, in this case, we can just kind of go to Google and have a quick look and see the definitions. And then I'll show you and tell you what I believe, we can get out of it as well. So the Fibonacci retracement is a method of technical analysis for determining support and resistance levels. They are named after their use of the Fibonacci sequence. So ultimately, guys, that is basically what it is. You can basically just find good support and resistance levels when it does come to the Fibonacci retracement. Whenever there's a big dip in the market, you guys can kind of place a Fibonacci retracement over a graph to find out exactly where it could possibly retrace to. It basically says it in the name. As you guys can see, if this was the top and we've had a big dip in the market, we can place a Fibonacci on this to actually identify where our retracements levels will be, meaning where we can basically find out where the most resistance could potentially come in. Now, one thing to actually understand about the Fibonacci retracement is that there's certain levels that we need to understand where they lie. Ultimately, a lot of traders tend to use a Fibonacci retracement to obviously find out where points of retracements may come in. A good example to use is that let's say a crypto was actually just beginning to head its way up. What would happen is that it's not always just going to head all the way up and non-stop. There is going to be some kind of retracement at some point. However, what you want to look for is where the actual retrace will come in and then start heading its way back down, because ultimately it's not going to head all the way back up, but it's not always going to go all the way down as well, right? So what you can actually do is grab your Fibonacci retracement, which you can find on this side right here. It would look like this when you click on it. It's like a little pitchfork. If you click the arrow and come down to Fib retracement, that's where you can find it. And all you want to do is go from the top of the chart of the thing that you are actually analyzing and then go to its local bottom. Now, what we can see right here, guys, is basically all of the retracements. Okay, now right here, if you look to the left hand side, this basically represents the percentage of all of the retracements. So it'll be 23.6%, 38.2%, 50%, 61.8%, and 78.6% would be the last level of retracement. Now, a lot of the time, what I actually like to do, and I learned this from the Blockchain Backer, is to actually add another level within this chart. It's called the 0.702. Ultimately, a lot of the times, charts will actually retrace back to the 0.702. In order to add it, all you've got to do is double click on the actual chart, head down to any of these, and you can just kind of tick the box and type in here. Mine's already in, but you can type it in, the 0.702. And what that'll do, once you click OK, it will add it in there for you, right? So we can see right here, I haven't drawn it perfectly. However, what would usually tend to happen more times than not is that there would be a retracement to the 0.702, the 70.2, before we then head our way back down. So it's a very good indicator to find out where we're going to retrace to. Now, why is this important for traders, for day traders, right? Let's say, for instance, they were actually riding this chart all the way up, but they didn't take profit right at the top. the next place they would take profit wouldn't be down here panicking. They would wait for some kind of a retracement to come up, and that is where they would take profit. Because if you look at it from a percentage standpoint, if you were to take profit from here and the chart is all the way down here right now, that's 10% down. However, if you were to take it from here, or you can see you would have saved a whole 5%. So you're basically just saving yourself and making more of a profit. Because let's be honest, you'd rather be taking if you invested down here, you'd rather be taking profit here than here if you couldn't take it up there. So now that we've added that, it's good to kind of just go into the actual Bitcoin chart and find some examples of this. And there's a lot of them, and you will see that right now. This is the Bitcoin chart on the daily time frame. Okay, now as we can see here, we have had a bit of a dip recently. Everyone's aware of it, you know, it's no secret. But what can we find from this? What could you have done to obviously try and save yourself? Well, if you look at this, this was the top of Bitcoin back in April. Okay, of course, we did have a dip before we retraced and then went into a further dip. Okay, now what could you have done? Well, you could have placed the Fibonacci retracement over the top just like this. You could have placed a Fibonacci retracement over the top just like that, all the way to the bottom. And where would you have retraced to? As you can see, guys, perfectly to the 0.702. Okay, literally pinpointed it to the 702. So where this actually found its top and we started going down, a whale, a trader, a professional may have waited for some kind of a retracement back to the 0.702, taken profit here, and he would have saved himself from losing even more. Okay, so that's just one example. Now we can actually zoom out of Bitcoin and go and find like so many other examples of this. Now, if we go over here, this was a 2017 bull run. And the same thing can be found over here as well. So if we zoom into the 2017 bull run for Bitcoin, this was a complete blow off top. Okay, if you didn't manage to take profit right here and then Bitcoin started going down, you shouldn't really get scared because there's always going to be some kind of a retracement. Now, where would that retracement have come from? Obviously right here. What could you have done? You could have got a Fibonacci retracement, placed it from the top down to the local bottom. Where did we retrace to, guys? Right there to the 0.702. So it's always good to find out where your retracements actually lie within the chart. So it's always good to add that 0.702 and find out. Now, one thing that's always good to mention, guys, is that it's not always going to come to the 0.702. In regards to retracements, the most common retracements you would find would be the 50%, it would be the 618, the 702, and the 786. So you've got all of these retracement here. Most commonly, whenever something is capitulating, you would end up finding some kind of resistance or support level whenever you go to those levels. So it's always good to understand that as well. So I wanted to show you guys another example. If we actually head over to the Ethereum chart right here, this was Ethereum's bull run back in 2017 as well. And you can kind of see the exact same thing happening. This was a blow off top. So this was the top where people may not have taken profit. There would have been a lot of FOMO going on. There would have been a lot of people rushing into the market to not miss out. But there was some capitulation. People would have got scared. But what the professionals would have done, they would have just waited for a retracement. Where would that retracement have gone to? Well, if you place it over the top again, we can see clearly that we went back to the 0.702 once more. Okay, so there's so many examples of actually looking at it like that. Now I'll go over to Bitcoin once more, guys. This is Bitcoin again on the daily time frame. However, what we can do is actually go over to Bitcoin's very first bull run back in 2013. This can work for absolutely anything, guys. And I'm just trying to show you how powerful it really is to save you guys some money. This was the blow off top. We had a capitulation. That would have been our bottom. We get our Fibonacci retracement. And what do? We go down there. Now, why am I showing you guys this? It's always good to understand and gain some knowledge in regards to what's actually happening within the market, right? In this case right here, we hit the 0.786 perfectly before we entered the full-blown bear market. And as you can see right there, all the way down right here, right? So you could have saved yourself a lot of money there as well if you didn't manage to take profit up there. So it's always good to understand exactly what's going on in regards to your Fibonacci retracement. Now, it's not always just looking for retracements whenever things are going down. It is always good to find out what's going on when things are going up as well. So for example, if I head back over to the Bitcoin chart and I take all of this off, one thing we can actually do, ignore that. One thing we can actually do, guys, is take a look and see what our retracements would be if we are still bullish in the market. Now, whether you're bullish or bearish, it is completely up to you. And ultimately, people can say that this is a blow off top and we are just having a retracement right now. However, one thing that I've been doing, one thing that I like to do is to always have a look and see where our local top was to where our local bottom is. Now, Bitcoin's been stuck in this range for a while, right? So one thing I've been showing my team in the Discord and everywhere else is where we can expect to find some kind of resistance on our way back up. So this would have been our local top right here. And if I spread it all across, that right there would have been our local bottom. Now, you can kind of see how these Fibonacci retracements do react to each retracement, right? We got to the 236 and we ended up finding support on top of it until we broke out into the 0.382. Finally, we found some support on top of there, found some resistance on top of the 50% until we fully broke out of it. And then once we did break out and had a bit of a dip, we ended up finding some support on the 0.618. So it's always good to refer back to these. However, now that we have passed all of our retracements on the short term, last retracement being the 0.786, as you can see, we passed that as well right there, and then we ended up finding support on it. It's always good to then zoom out and find out what our full retracements would be. So in Bitcoin's case, all you would want to do is, once again, you'd go from our actual top right here, and then you'd go to our bottom. And this is how I would recognize where our resistance levels would come in on our way back up. And it's kind of valid as well in this case, because one thing I was saying to the guys in my Discord especially is that these would be my level of interest in regards to retracement. The first one being at the 0.382, which is exactly where we found our next point of resistance. Once we break through that, it would be the 50%. And by the way, these in the brackets represent the actual price. So the next point of resistance for Bitcoin was found at 42,546. Once we break that, I would expect that our next resistance would come at 46,790. Okay. So it's always good to understand what you can do short term with it as well. It's always good to see, to find out where you can actually wait for the retrace to take profit, and then it will go into a bear market, or it'll be good to understand where the actual resistance levels are in order for us to break out of them and head higher. So for day traders, the Fibonacci is a very, very powerful tool. And even looking at something like XRP on the short-term time frame, right? So if we look at XRP, you can see right here that from the top to the bottom right now, these are all of the levels of resistance that I would personally be expecting for us to come across. So right now, the next one would be 84.78 cents. Okay, and then obviously just heading our way back up, that is what I would be expecting. However, if you look at it from the short-term standpoint and we go to the 4-hour and we realize what our local top would have been for XRP, we could take it from there and we can see that the full retracement has been made for XRP, hence me now going over to the daily chart and finding what the actual retracements would be. So that is basically what a Fibonacci retracement is, guys. It's all about identifying where the resistance levels are, where the support levels are, what we can expect prices to retrace back to once we have had a full-on blown top, and where we can actually expect certain resistance levels to come in if we are expecting things to go up as well. So it's always good to understand where these can come in, because it can help you if you are some kind of day trader or not. Hopefully I've been able to kind of explain this in a way that you are able to understand. There's actually another thing that you should understand too, because with the Fibonacci retracement, you would realize that they've actually got numbers towards the top as well. So if we do this, you can see what are these numbers on top. Well, these are also levels of where we can find certain resistance. Now, they are not retracements, right? These are where prices could possibly get to if we pass all resistance levels. XRP for me, and it's actually a very good area to try and identify where maybe the top of a crypto could come in if that's what you're basically trying to predict. So this is the entire bear market of XRP, for example. Now, how I try to determine my price levels or where I'd be taking profit for XRP would be, for instance, taking the complete top of XRP, spreading it across the entire bear market and finding out what our exact top of XRP would come in at. And for me, it would come in anywhere between these levels right here. So personally, I'd be taking profit between $10 to $15. However, that is just me. It is not financial advice, guys. It is just my opinion. However, it is sometimes a very good way to identify where the top of an actual crypto could come in as well. So that's basically going to cover it. Like I said, use it if you want to identify where certain resistance levels are. People would realize that every time I do chart analysis on a live stream or in a video, the most powerful thing and the most common thing that I tend to use is the Fibonacci retracement tool, because to me, it identifies where resistance levels will be coming in if we are grinding our way back up. It would identify to me where I'd potentially take profit if I missed the top of something. So it is a very, very good tool to use, and you'll find that you are always getting some kind of reaction on one of the retracements. Do not forget to add the 0.702 retracement, because to me it's probably the most common one that does get hit, the most common one where resistance would be found. And usually once we do break through the 0.702, it's usually a very good sign for us to indicate that things are going to be moving a lot higher, and the market is quite bullish. So it's very important that you do add in that 0.702. Hopefully you've learned something in this video. Like I said, I'm not a professional when it comes to trading. This is just my standpoint on it. This is how I use it. Someone else might explain it a lot better than me. This is how I like to explain it and how I like to use it. Hopefully I've given you some examples to show you that as well, and you can kind of walk away and start doing your own thing with it. The more you do it, the more you'd get used to it, the better you'd get at it as well. And the more you'll be able to actually start identifying Fibonacci retracements on charts once you start actually using it. I do use TradingView. I've shown you where to find the Fibonacci retracement as well. So yeah, that is going to cover it. Like I said, if you're in the comments and you use this in another way, or I've explained it bad, I do apologize. Like I said, I'm not a professional, but hopefully you've been able to take something away from this regardless, and you can start using it moving forward. If you've enjoyed this video, guys, please be sure to leave a like down below. Please subscribe if you haven't already, and make sure your bell icon is turned on for any updates, because I will be presenting a lot more indicators and tools that you can use when it does come to charting crypto. So look out for those videos too, and I'll see you guys very, very soon. Take it easy, people.